Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, along with Brianna Valesky, and we have Karl Snyder on the line. He's Chief Market Strategist with Garden State Securities, keeping a close eye on the markets. Karl, how you doing?
Good morning, guys. How are you?
We're doing good. We now have some green on the screen here. S&Ps are making a nice comeback on the day. But want to talk to you about a couple sectors that you've been keeping an eye on. And, of course, they're related to interest rates. The numbers from the Fed on Friday, strong job growth indicating, hey, interest rates may actually be going up this year. First, give us your overall take on interest rates.
Yeah. Okay, good. Let's talk about interest rates. Everybody, for the longest time, I remember at the end of 2013, everybody said that interest rates were going to go up, and here we are, interest rates have gone down. There's a couple key levels that I'm watching. Ultimately, the Fed would love to normalize interest rates, but on the 10-year, the area that I think is important for the 10-year is if we can break out and get above 240. We tested that the other day and looked like we might get a little higher. But if we can go above 240 and hold 240 on the 10-year, I think that opens the door for us to go to 261 and then potentially 269. And the 10-year is a little bit more closely related to what the Fed is going to do or not going to do. That's where people are a little bit more opinionated.
Okay, and then there's a lot of sectors that are affected by interest rates or the perceived notion of interest rates going up. And the biggest one has been the utility sector. You have some nice dividends paid by some of these companies at 3 or 4 or 5%. Taking a look at the XLU here. Bad day yesterday. Is it time to maybe step in here? Or we get enough of a sell-off where you're protecting your principal? I'm looking at the XLU here, the Spider Select Fund in Utilities.
Right. I don't like catching falling knives. I like to find levels. I've kind of been discussing utilities and then, using XLU as a proxy to select Spider ETF. And what I'm seeing here, I posted out the other day, I do a lot of point and figure, and that's going to be probably a little bit alien to some of the listeners. I do a lot of point and figure for myself, and then I use, bar charts, candles afterwards. But yesterday I had pointed out that, we've got a broken, looking at my point and figure charts, we definitely, after a multi-year uptrend in utilities, we have a broken trend. And I don't like trying to catch a falling knife. So I need to see some stabilization. The area that I'm really going to key now, I'm going to be looking at the summer lows from last year. I think that's going to be a key support level for the utility sector. And if those can't hold, I think, we've got a lot more carnage in that area. So I'm not calling all doom and gloom. I'm just saying we could very well stabilize here. I'm not getting involved. I'm going to keep watching it. I think short term we need to get above 43 and hold it for it to look somewhat interesting or somewhat stable. And on the downside, I think that we have to gauge, August on the XLU, we saw lows in the 40 area. So that would be my key area of support.
Rob Hood in the chat is reading my mind here, and you mentioned the term point and figure charts. Now, I'm vaguely familiar with them. First, could you explain point and figure? And then Rob Hood's question is what's the best way to learn point and figure charting?
Okay. Unfortunately, we can't have a quick discussion on point and figure.
Okay.
It's pretty vast. And I'd love to sometimes, if you guys ever want to do anything specific on that, we can spend some time.
Great.
It's using price. And you can do a lot more with it, but what the points and figure are, you're using columns for X's and O's. X being your up column when price is going up, O's being your down column. And there's many ways to use it. You can use high-low data from intraday. You can use closing data. You can use different percentages. You can use user-defined. The basic way I use point and figure is I use high-low data because that's more intermediate term. And I also use a 1% with a 3-box reversal. And that sounds kind of alien to some who don't. But 1% being how much a stock or any security has to move, and 3-box reversal meaning it has to move in the opposite direction for it to reverse whatever column it's in. The best way to learn it, quite frankly, is to follow me, because I do a lot of point and figure, both on Twitter. I tweet out a lot on point and figure, and then a great book to read is Jeremy Duplessis did a book, and it was a great book to really get your head around point and figure. It's the definitive guide to point and figure charting. But you gotta be willing to put some time into it. Otherwise, you can make yourself dangerous with a little bit of knowledge, to be quite honest.
Yeah, and I was just looking at this one platform that I'm on, and that didn't even have point and figure as an option. But then I'm looking on my TradeStation platform, and that did have it. So I guess there's various platforms that you can follow that would have point and figure charting. Back to sectors,
Yes.
that have really been under the microscope lately, and that's been the transportation sector. Got kicked off a couple of weeks ago with some negative comments at the Wolf conference. What's your take here on the transportations?
The short answer is they look really bad. And everybody's going back to Dow theory, et cetera. Now, and that's another long-winded conversation, but what you want to see with Dow theory is you want to see both the industrials and the transports confirming each other. However, when you have an established trend, which we have an established bull trend going, we have a divergence right now. That's all we have. We don't have a Dow theory sell signal. We would need different things to materialize. However, the transports look really bad, and we can't deny that. And that weakness. So it's not so much that they're not making new highs. The fact is that they look broken, and they are broken. The charts are broken. Transports are not doing well. It's been a sector that I follow closely, a sector that I was bullish of the fourth quarter of 2014. They looked really good. But now, going back to what I said with utilities, what I'm going to really say is a key level of support is going to be right around 7,600, 7,700, which is a way we've got some distance before we go there. But let's use not necessarily last summer's lows, but the October low was 7,700 for the transports, and I think that's a critical / key area of support. I'm not calling a major crash or anything, but I'm saying if you really want to pay attention to divergences and such, divergences aren't a reason to trade. There's something to kind of raise a yellow flag. Let's watch transports, and if we take out the October lows, I just don't think the broad market can sustain those types of divergences. I mean, not making new highs are one thing, but to see those types of sell-offs in both utilities and transports are going to really, for me to really start watching the broad market as a whole and look for signs of, okay, are we starting to, crack here?
Okay, we got stock coming out of the chat here. Can I just throw a symbol at you and get your take on it?
Absolutely.
RRD, Ruben Donnelley here, print digital supply chain solutions, help create powerful and cost-effective communications. Nice looking chart here, trying to keep its head above 1950 here,
Mm-hmm.
couple highs above there. What's your take on RRD?
That's funny you mention it. I'm very familiar with RRDonnelley. I remember it being the big print company that did all the prospectuses years ago. Yeah, it looks pretty good. It looks like after breaking out in February of this year, looked like it wanted to continue that breakout, but fell back to support around the 1750 area. So I wouldn't go long or short it. I would wait for some clarity to which way it wants to break. A breakout above 20, I think you look good. And if a breakdown below 1750, the May lows, I think you got to watch out for the name, and you could potentially look to short it, even though I'm not, recommending you do the shorting, but I'm saying it could be an entry point. But right here, you've got to watch it for a breakout to the upside or the downside.
Okay, all right, and we'll see if we get any more stocks coming out of the chat here. I want to talk to you a little bit. Last guest, Tim Melvin, was on. We were talking about the financials and some of the big financials, selling something, buying something. Seems that they've been buying here, the financials. What's your take on that? Is it because the perception of interest rates going up, or just nowhere else to put your money?
No, I think you'll obviously that you're always going to have sector rotations coming out of one sector going into the other. I'm looking at the XLF, and I'm thinking that it looks pretty nice here. Obviously, KRE looks strong. I'm not looking at the chart just yet for today, but XLF, I think in order for us to get a breakout, my breakout point, and I'll be pretty specific, but it is my breakout point on XLF is 25.17. If we can break out above 25.17 and hold that level, I think we can see another 10%. My first price point would be around $28 on XLF. And a lot of that, going back to your question, is with interest rates. Banks, insurance companies, because if you can get that better spread, they can make more money. So, from a fundamental reason, yes, you have that as well.
Okay, let's move on here to some other issues of interest. Apple Computer, AAPL, biggest stock in the world, ran into a little bit of problems yesterday. And despite there being a lot of green on the screen here, Apple trading down 60 cents at 120, 127.20.
Let's take a step back with Apple. Apple had every reason for the bears to come in and really do damage to Apple. If you look back on the chart, and you look at April, you see that really nasty-looking candle, that bearish engulfing candle back on April 28th. It made a new high. It closed the gap from the previous day. And, it was a total setup just for everybody to really get negative. And, traded down for a few days. But here, right around 124, it found support, which back in March was a support area around 121. So I think Apple above 124 short term, and really the line in the sand would probably be 120. I think you're okay. Like I said, every reason in the world for Apple to really collapse after it made that new high and had that horrible print and that ugly looking candle. And I'm really emphasizing that because that was every reason for short sellers and the bears to really take control of Apple, and they didn't.
And you know what? That was on earnings day.
Yeah.
Yeah, very interesting. Okay, here's another one, a tricky one for you that I think I've been totally wrong on here. Mankind, the makers of Hell Frieza, this stock has just been on it. I thought it would stop at 5, 5.5, 6, 6.5. Now we're pressing over $7 here. I have not seen any news on this. In fact, the last news that I saw on this issue was bad news. All the street was downgrading it, and now it's just an incredible rally here. What's going on with Mankind?
I know the name. I'm not familiar. If you give me the symbol, I could definitely take a look at it. I don't follow it, but
sorry about that. MNKD.
That's what I thought, but I didn't put it in. I just wanted to make sure, so I'm looking at the right thing for us. Well, look at it today. It looks really strong. It's a V bottom, obviously. I'm not, being Captain Obvious for you on that one, right? No help to you. But if you look at the February highs of 788, that's where your near-term resistance, everything to really show that you got potential for this to build a flag, when you have a steep or big rally up, and then if you can get some consolidation over the next couple of days and see a break to the upside, that would be extremely bullish. I don't follow the name, so I'm just purely talking about what I see on the chart.
How about, we were talking about the transportations here. How about American Airlines here? Boy, stock's been in trouble, and we are now making a new low for the move here. Just based on your point and figure or your charting, what do you think? Is there any place? Let's say you're short, Karl, and you want to cover short in American Airlines. Where would you be looking for a possible area of support? I'm looking at the weeklies, and I'm looking at the monthlies now, and oh my gosh, that doesn't look good. That does not look good.
No, it's not a good looking chart, right? I mean, a great place if we were going to short it would have been when it broke down 46 and then it tried to get back up above 45 and it didn't. That would have been our entry into it. So you got a perfect top. I mean, look at that. It's you know, if I were just a pure short sell, that's a perfect topping pattern on the daily.
Okay.
So we look at the weekly and see what further downside. Right here, we're seeing it at 38. I mean, I think it could go to maybe $36. But if it gets back above, I would be concerned, or if I was short the stock, as you were saying, if I was short in this position, where would I would look for further weakness in the stock because it looks like it wants to. But if it gets back above, say, 40, I would close it out. I would probably close it out because I don't know where the bounce will take you back up to, so I would take the profit.
That's another great point too. Is when you're looking when I get asked for commentary on a stock, I'll try and think of it if I was in the opposite position, where I would buy it on weakness and where I would buy it on strength, and just keeping a buy stop in to protect profits. Another widely held stock here, General Electric, which has done absolutely nothing since it announced the big buyback plan. Dennis and I kind of thought it would be better if they paid a special $5 dividend. That really would have given the stock a boost, but instead they chose to do the buyback. GE, buy, sell, or hold?
Full disclosure, I'm long the stock. So
Okay.
I am in this stock right now. And with that being said, right here, I think it's behaved well. I mean, great. It hasn't done anything since the announcement. A big gap up in the stock, but let's look at it a little bit differently. If you're being more of a longer term, I know we like to talk about trades, et cetera, but you're getting a decent dividend. Don't get me wrong. I would love a $5 special dividend. My clients would too, but we're getting a dividend of over 3.3% right now, and within the name specifically, it gave back a little bit after that big gap up, but above 26.50. I mean, if you kind of want, a name that you feel comfortable with, it's a name to kind of. It's not sexy. It's not going to rip, I don't believe, but it's a name that you can kind of feel comfortable owning here. You get a pretty steady dividend. Not that I'm a big time dividend investor, but it's you can't beat 3.3%. And it's kind of, marking its time. As long as it stays above 26.50, I think you can hold it. And who knows? We don't ever know if they're going to come out with some kind of news or announcement that they may do something a little different to the upside, and that could be a catalyst for the stock. But it's just something that is just really holding the nice pop that you saw, the gap up, and you can hold it for the dividend play. It's nothing sexy, nothing that you're going to make a killing in, but I don't think you get hurt in the name either.
Why do you think that this has held up better than some of the other high dividend paying stocks, your Procter and Gamble or your Johnson and Johnson?
I think the market likes what they're doing. They're shedding a lot of their exposure to businesses that they got involved in back in the heydays, back in the 90s, late 90s and such. They acquired so many areas and so many businesses that really weren't with their primary businesses. Obviously, the market liked the fact that they were going to shed those because we saw that big gap up. Why it's held up, I think that the market, I can only, assume, I'm going to let price really tell me, but I'm assuming that people like the dividend. People think that maybe they could potentially raise the dividend. They got a strong balance sheet. The balance sheet's only going to get stronger as they shed some of these non-performing assets. And then you have the industrial component of the company, which really is its bread and butter. And if we do see, the global economy doing well, that should be good for GE.
Okay, stock's taking one on the chin today. Burlington Coat Factory here pulling back. Dow under $50. Been a long-term stellar performer here. Any take on Burlington Coat Factory?
Oh yeah, we got a big gap down. Today obviously, it looks like it may test its 200-day around 48, but below 50. I would be out of the name. People, I like gaps. some people say you always fade gaps. I'm not a big believer in it. It means something material has changed, whether it's a gap up or it's a gap down. And it's not true with everything. You have to look at every chart because not every security is the same. But broadly, I think gaps tell you something. There's a material change in the sentiment of market participants. And we've seen a downtrend, though. So it's nothing new with Burlington here. We've seen that it peaked in March, high at 61.94, downtrend, looked like it was going to try to build support at 50. With this gap lower, let's see how it trades today. If it can't get back above 50, I would look for continued weakness in the name.
Yeah, they're hitting it as we talk. One stock before we let you go, coming out of the chat from Rob Hood. TASR, and that had a nice run, was getting a bunch of new contracts here. No new contracts but as of late, but still holding some nice gains. What's your outlook on TASR?
I know the company. I don't follow it a lot, so but I will look at the chart, and the chart looks good. Looking at the chart here, it kind of almost went back to its 50-day earlier, late in the month of May, early month. Here it looks like it's trying to build a little bit of a base. And I think that if you can get back above 34.50, looks really interesting. But looking at some other components to it, the RSI looks good. It bounced off the 50 level, the RSI of the company, the stock's RSI. And if we look at the MACD, it's on the verge of a MACD crossover, which, those aren't automatic buy or sell signals, but they can help you in your analysis. And the MACD looks really good, looking to have a bullish crossover. So if you could see that bullish crossover with the MACD and price confirm, I think TASR could definitely be very interesting here.
Karl Snyder, Chief Market Strategist with Garden State Securities, joining us here on Benzinga's Pre-Market Prep. Thanks, Karl. We covered a lot of different things here and gave some good insight to our traders and investors. Thanks a lot, and we'll talk to you again soon.
Thanks so much. Take care.